Welcome back to ChartDecoder. Today we are going to decode what happens when ADX stays below 20. This is one of the most misunderstood zones in trading, where traders either get chopped up or fail to see the early signals of a trend. In this session, I will share first 4 rules of ADX and we will look at chart examples to see these rules in action. Rule number 1. ADX sloping down and below 20. When ADX line slopes downward and falls below 20, the market is telling us very clearly there is no strong trend. Price tends to dip sideways, false breakouts are common, and traders who try to force entries are usually trapped. This is why patience becomes the trade in such phases. Take a look at Mastercard's daily chart. The price was stuck in a sideways drift and ADX had slipped below 20. Notice how multiple breakout as well as breakdown failed in this particular stock during that period. Here was a breakout which failed. Here was a breakdown which failed. Microsoft 15-minute chart. Mind it, ADX works well across all time periods. Here is Microsoft chart on a 15-minute. A clear false breakout. Then again on the downside. Well, here we had a breakdown in that time. ADX was moving up. We'll be discussing that later. But as of now, let's just concentrate on the shaded area. ADX was quite low, lower than 20, and see what happened. A breakout failure had taken place. Let's check out rule number 2. Extremely low ADX less than 15. If ADX compresses to extremely low levels of below 15, the market enters a dead zone of inertia. Price just oscillates in a tight range. Momentum traders bleed capital here, whipsawed by noise. Range traders just may scalp through these zones, but momentum traders, please stay out. Here is McDonald Corporation on a 15-minute chart. Notice how the ADX sank below 15. Price action was just a narrow box of movement. The breakout failed and only range scalpers could survive. For momentum traders, this type of position is poison. Rule number 3, ADX rising from flat low levels. Well, this is one of my favorite. Explosive moves are born when ADX has been flat at low levels. When ADX finally begins to rise from that flat base, it signals a calm before the storm. That direction itself must be confirmed by plus DI and minus DI. But rising ADX tells us momentum is waking up. Look at JP Morgan on a 15-minute chart. ADX stayed flat and lifeless for a long stretch. Then as soon as it began to lift, well, the PDI crossed above the MDI. We'll be discussing PDI, MDI in greater details and an altogether new way in an altogether new video. But for now, let's take it this way. PDI higher is a bullish signal. MDI higher is a bearish signal. But here what I'm concerned is on the movement of the ADX. It started to move up, and as it moved up, JP Morgan had moved up as well. The same pattern shows up on Amazon daily chart. Weeks of silence and then ADX rising. Suddenly a strong directional move. This is why patient traders often get rewarded. The biggest move comes after flat ADX phases. Rule number 4, one of the most reliable continuation cues is when ADX makes a U-turn and turns upward from, well, I would say it this way, 20 to 26 levels. Not a narrow range of 22 to 26, rather a broader range from 20 to 26 levels. There is a U-turn in ADX for the upside. This usually signals that momentum is reviving after a brief pause, but context matters. If plus DI dominates, expect bullish continuation, and if minus DI is stronger, expect fresh selling pressure. Boeing daily chart. Notice how ADX dipped, touched 20, 21, 22 odd levels and then moved upward. In all the cases, MDI, PDI guided you which way you should be trading, and ADX was there to signal you, well, the trend will be strong in nature. Just was the third one. Here the returns were quite muted. You need to observe the slope of the ADX. Compare this particular slope with the other two. Well, the slope was quite sharp enough in first, second, and as well as the fourth case. But in the third one, the slope was not that sharp, and that's why the return was also quite muted in nature. Well, to recap, rule number 1, ADX less than 20, weak trend, avoid chasing false signals. Rule number 2, ADX less than 15, dead zone, momentum traders, please step aside. Rule number 3, ADX rising from flat lows, the best part. Well, calm before the storm and the trend is awakening. Rule number 4, ADX U-turn from 20 to 26 levels, momentum revival, it is a continuation signal. Respect these 4 rules and ADX will stop being noise and start becoming your edge. In the next video, we will explore ADX turning points, rule number 5 and 6, where ADX warns us when a trend is running out of steam. So if you found this useful, make sure to like, subscribe and continue with full ADX series. See you in the next one.